Welcome to SG Investment. Our channel is dedicated to helping you make informed decisions about your money and to guiding you on your journey towards financial success. Subscribe now and join our community of like-minded individuals on the path to financial freedom. 5 levels of investors according to Robert Kiyosaki. We will explore the different levels of investors according to Robert Kiyosaki. From those with zero financial intelligence who are constantly in debt, to those who are too busy to invest, to independent investors, and finally, the capitalist level investors who are business owners and utilize other people's money to make investments. Each level presents its own challenges and opportunities, and understanding where you fall on the spectrum can help you make informed decisions about your financial future. Level 1: Zero financial intelligence. Sadly, in America, once the richest country in the world, more than 50% of the population is in the bottom tier of the I quadrant. They make a lot of money and spend a lot more than they make. For example, Robert has a friend who seems very wealthy. He works as a real estate broker, has a beautiful wife and 3 children who attend private schools. They live in a beautiful house, an expensive European car. When their children grow up, they are bought an expensive car by Robert's friend. They look rich, but actually they are in debt. They are rich, but actually poorer than most people. Now they are homeless when the real estate market crashes. They can no longer afford to pay interest on all the debt they owe. Level 2: People who like to save are losers. Many people believe saving is a smart move. The problem is now money is no longer money. After 1971, President Nixon made the US dollar non-gold standard and money became debt. The reason why inflation has increased since 1971 is because now the US is able to print money to pay its bills. While the Federal Reserve Bank and central banks around the world print trillions of dollars at lightning speed, every dollar printed results in increased taxes and inflation. The largest market in the world is not the stock market, but the bond market is another term for savings. Remember, savers, bondholders, and most people who keep money in retirement funds are the ones who park their money, invest long-term, while professional investors save their money and invest it in assets, get that money back without selling the assets, and then move it around to buy more assets. That's why savers who park their money are the biggest losers. Level 3: I'm too busy. This level is filled by investors who don't have time to study the world of investing. Many people at this level are highly educated people who are too busy building careers, families, hobbies, and vacations. Therefore, they prefer people who are financially skilled to take care of it for them. They leave their money to the experts and then pray that the investment turns out well. Not long after the financial crisis exploded in 2007, many wealthy people realized that the people they considered trusted and experienced were fraudsters playing Ponzi schemes. The problem with level 3 investors is that these people don't learn anything from their losses. They don't have any experience from their losses except bad experiences. All they do is blame their advisors, the stock market, or the government. It's hard to learn from mistakes if the people experiencing them don't know what they did wrong. Level 4: I am a professional. This level is filled by independent investors who are in the S quadrant. This type of investor buys and sells his own shares without the help of a stockbroker. When investing in real estate, this type of investor is self-sufficient, who will find, repair, and maintain the property themselves. In many cases, these independent investors have little or no financial education. After all, if they can do it alone, why should they learn new things? If you want to take it to the next level, investors need to take regular finance classes and hire coaches to beat investors who do it all themselves. Level 5: The capitalist. This is the level of the richest people in the world. Capitalist level investors are business owners from Quadrant B who invest in Quadrant I. Level 4 investors are independent types who are Quadrant S people who invest in Quadrant I. Here are some examples of the differences between a level 4 investor and a level 5 capitalist investor. 1. Investors from the S quadrant usually use their own money to invest. Investors from the B quadrant usually use other people's money to invest. 2. S quadrant investors are often the single most intelligent investors and S people. B quadrant investors invest in teams. B quadrant investors don't have to be the smartest people, they just need to have a smart team. 3. Investors from the S quadrant earn less returns than investors from the B quadrant. 4. Investors from the S quadrant are also selfish. The more selfish, the more money they generate. B quadrant investors should be generous. The more generous they are, the more money they make. 5. It is difficult to make money as an investor from the S quadrant, easier for an investor from the B quadrant. Once a person knows how to build a business in the B quadrant, success will continue to attract money. It's easier to earn money in quadrant I if you've been successful in quadrant B. That's a very difficult condition to achieve. Thanks for watching. Don't forget to like, comment, and share.